Hello and welcome to Commodity Champions. I'm Manisha Gupta. We'll be talking about non-agro space today because we have seen a lot of movement happen in 2023. It was a year that saw constant moves marred by high inflation rates, geopolitical tensions and a downtrend in global economic growth. Now, with the inflation cooling down, central banks are looking at introducing cuts in benchmark interest rates over the next year. Meanwhile, the Israel-Hamas war and the Russia-Ukraine conflict rages on. As we get ready to enter 2024 with fears of an economic slowdown and the energy transition drive picking up, what will the next year look like for the non-agricultural commodities? To discuss the outlook for 2024 for metals and energy space, we are now joined by Kunal Shah. He's head of commodities at Nirmal. Anuj Gupta is head of commodities and currencies at HDFC Securities, and Ajay Kedia is director at Kedia Commodities. Gentlemen, hi, thank you so much for joining us. The last week of 2023 and hopes now pinned on 2024 on where the year can really take us. While the markets are looking at stronger demand going forward, whether or not that would seem to be the case in for prices is what we are looking to explore. Kunal, hi, I'll start with you and we'll talk metals in this segment. What are you looking at in sense of industrial commodities? Because many people are calling it the year of metals, the 2024. There are strong bets being put on copper as of now. But how would you stack all the metals in sense of industrials? And what's your sense on what kind of returns can we see in the next year?
Yeah, well, I'm Manisha. First, when we talk about metal, apart from the demand supply, the major factor will be the macro factor, like what is the outlook on US dollar. And it clearly seems the outlook on the US dollar seems to be on the downside. We are going to see the expectation is that in 2024, the Federal Reserve will cut the interest rate by at least 2 to 4 times. So at least 1% interest rate cut is what we are expecting. That is going to drag down the dollar index going forward in 2024. So that itself is bullish for metals, number one. Number two, if you look at from the demand and supply point of view, when the rates are being brought down in Europe, in US, in other parts of the world like UK, even in the developing economies like India. So when the interest rates are going down, at that time also the demand side is going to get stronger. And the third most important point, the supply side. Supply side of a lot of these base metals are already constrained. So when the demand picks up, so far 2023 was lull year for metals mainly because of China. China's demand growth have remained muted. Even going forward in 2024, it is likely to remain moderately upwards. But the fact is the other part of the world are consuming more metals than what they were consuming, like India, like Africa, like Indonesia, like Philippines. So other parts of the world from where the demand growth of these metals are going to come from. India's copper demand growth, we are expecting it to be somewhere between 25 to 30% over the next 2 to 3 years. We are going to see a double-digit growth when it comes to copper in particular. So combination of these three factors makes me believe that the downside is very limited and a rally is on the way. So accumulate base metals, especially copper, and we are going to see at least 8 to 9% or 10% upside from here going into 2024.
Absolutely. Copper does seem like everybody's favorite. When you look at the global banks and brokerages, they also seem to be putting copper as their favorite, with targets anywhere between $9,000 to $11,000 a ton expected in 2024. Anuj, would you also keep copper as your favorite? And what's your sense also on the other metals as we head into 2024?
Yes, Manisha ji, bilkul. If you see the trend of copper, let's say if we track copper from year 2020, it was increased by 34%, in 21 increased by 25%, and in year of 22 it corrected by 4%. After the 4% of correction, this year's increased by almost 2%. Apart from other metal, this is the only metal which increased on a positive note. So definitely copper is a product which is used by many industrial activity, many industrial economies, and this is the main favorite product for the industrial activity. Yes, definitely it is not increased as much as we are expected at the starting of year 23. But yes, definitely in the end of the year 23, we are seeing a positive trend in the copper market. And even, yes, definitely we are also seeing a positive cues coming from the China. So China is the biggest consumer for the copper industrial metal. So definitely we are seeing a very positive cues from the China as well as from the central banks from the US. So they and in at the time of starting of 2020-23, we are we were expecting some slowdown, but now economies are recovering from the slowdown and the concern. So this is a positive point for the industrial metal. So definitely we are very optimistic for the copper price. And if we talk about the target for the 2024, yes, we are expecting it may test 9,000 to 9,500 on a international market base, LME base. And on MCX, we are expecting it may test 750 to 800 kind of level, which it tested in last year also. So our view are very optimistic for the copper.
All right, so 8 to 10% of gains in the next year is what is the conservative view going forward for the metal there. Ajay, what's your sense? Copper, of course, is a target that we would want to know. But when you look at the other commodities, nickel, of course, continues to be an underperformer. And we've seen the liquidity or participation in the Indian markets continue to go down. But the other metals, which have started to see some support since October, November, even in month of December, clearly are aluminium and zinc. Would you see fundamentals be supportive for these metals also as we get into the new year?
Yeah, good evening, Anuj. Definitely starting with the copper only, we have started this year with the high of almost $9,400, and it went down to the level of 7,800 because everyone was under impression that China post-COVID things would be improved, and we have seen whatever the effort China has taken, but that is totally in vain. Let it be on from the property side, let it be from the interest rate side. Despite of every efforts, prices was not at all moved, and currently also we have seen $8,600 is been consolidating. But coming back on 24, see, whenever any economy has to perform, the Kunal has rightly taken points like interest rate scenario and everything has been in line for 24. So I think good gains are being expected in whole base metal because consumption is going to be very firm. But there is a little bit concern because whenever there is a rise, I think higher side metal price won't be sustaining because there are many supply that has been disturbed in post-COVID that can revamp again, and that could increase the supply side. So we are expecting at least first half we can go level like let's say 9,000, 9,100 for copper, and from there again we can face an important resistance what we have seen in the month of Jan and Feb around 9,200. So I think for the first half we are bullish to test around 9,000, 9,100. Then we can see a little bit pullback coming in the prices. Coming on the aluminium, that was a surprise move. Multiple of times this year since June, we have seen prices never went down below $21.50. Currently, it's around 23.26. Looking to the fundamental side, even from China, we have heard about the orange alert has been given and many smelters had cut down their productions. No doubt demand proportionately has not been so humorous in 2023 because of recession fear globally. But coming on 24, we are expecting slowly and steadily demand from aviation, packaging industries are showing a very good improvement. Maybe a jump towards a level like let's say 2480, 2500 is expected conservatively for aluminium, whereas on domestic side maybe again around 235, 240 could be the range. In all, we can say copper, zinc, even zinc right now currently holding very well around 2600 level. There is a good range since April. We have seen market never went below 2250 nor about 2600. So I think consolidation is been there for LME zinc also. There we can see a good breakout which can gain the prices to the level of 3,000. So overall, we can say copper, zinc, and aluminium, these three commodity is going to be a positive for first half. Coming on nickel, I think still delivery concerns from LME and Russia has been there. That is why one should be slightly be cautious on nickel side. But no doubt, since 23 has started, we have seen a tremendous fallback in the prices. There is a the supply side is still concerns been there, or we can say inventory with the LME. I think a downside is very limited with the LME nickel also to the tune of, let's say, 16,000. On higher side, we may see a bounce back around 20,000.
Okay. So, well, there's a buying opportunity coming in for metals across board, and copper, aluminum, zinc, all of them could do better. Kunal, if you had to put it in 1, 2, and 3, what would that be?
Copper, aluminum, zinc.
All right. Kunal, also talk to us about precious metals now, because this is an area that saw strong gains, especially the gold price is an all-time high in various countries and currencies. The closing is slightly on the lower side, but not without the hope that we could be looking at more highs in 2024. What is it that you will watch, and what are your targets?
For precious metals, Manisha, year 2023 was a trailer. I think the picture is going to start in 2024.
Okay.
We are going to see a sharp up move as far as both precious metals which are trading on MCX, gold and silver, are going to exponentially shoot up going forward. $2,350 to $2,400 on COMEX for gold is on the way, and $28 to $30 level on silver on COMEX is on the way. Translating all of that in Indian price, conservatively, MCX gold should test around 68 to 69,000 this year, 2024. And as far as silver is concerned, 87 to 88,000 are the conservative targets for us. So no brainer, interest rates about to go down, dollar index about to go down further, along with the central bank buying, which is going to continue. The ETF buying is also going to emerge from the second half of the year. And the most important reason, the geopolitical landscape of the world doesn't seem to be improving at all. So Russia, Ukraine, now we have Middle East, Israel, US, China, Taiwan. I don't know what other event which we are going to see going forward. So worsening geopolitical landscape is also going to add fuel in the fire once things worsen. So this is the time. Gold is must. Don't look at the price. I tell it.
Okay.
I tell it from your show from the quite a bit of time. I again tell it to investors. Just be invested in gold. This is not the time where you think about, okay, gold prices have shot up and I think it will go down. No, it's not going to go down. It's going to go up exponentially from here.
All right. Anuj, what is your sense? Yes, the gold prices will go higher from here. And this is finally a year where we saw various financial experts also start to tell their clients on including gold into their portfolio. I mean, that has been a game changer this time around. And also because we have so many financial products now to invest in gold. How would you look at gold and silver prices, Anuj, for the year 2024?
For 2024, we have to keep two things in the mind, because one thing is that the interest rate decision by the FOMC, and second was the central bank's buy for the gold. So these are the two main aspects which will be, keep in mind while entering 2024. And due to this, we will see, positive trend in the gold, because already FMC said that they will cut interest rate in 2024, and the demand of central banks is, in this are also increasing, and expecting in 2024 they will add more gold in their portfolio. So if central banks are adding gold in their portfolio, definitely retail participant or small trader will, increase their portfolio in the gold. So this is again optimistic, might be by the sovereign gold bond, or might be through the ETF, or might be towards the electronic exchanges. So demand and the interest rate are the two factors, and due to this we are very optimistic for the gold. And even in this year also we have seen that somehow gold prices beating the return of the equity. So again, I'm expecting that gold will again beat the return of the equity in 2024, and our target for the gold is towards 65,000 to 67,000, which is in international market almost to $2,180 to $2,200. And on silver, we are expecting 80 to 82,000, which is international market around $26 to $28 per ounce. So trend is positive, and on the fundamental side, we are very optimistic for the gold and silver.
All right. So the numbers may vary in sense of your targets for the next year, but you're all very bullish on gold and silver going forward. With that, we'll go for a short break. When we come back, we'll talk about the energy space, where we also are looking at the crude oil prices ending yet another year, a second year, by the way, in the negative. We'll talk about what lays ahead for 2024.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. For the energy markets this year belong to concerns from demand, whether it's from China or from Europe. On the other side, we saw OPEC and allies continue to try to cut output to ensure that the prices stayed supportive. On the other side, it was also about record high production from the US markets. And these are the themes that we are entering into 2024 with as well. Kunal, how do you look at these fundamentals, and how are you looking at the crude oil prices now performing? And would you at all believe that we are headed towards that three-digit mark at all?
It's been a very volatile year and full of surprises as far as the numbers are concerned. So in the mid-year, it was expected that the US oil production has peaked out. And suddenly from last 2 months, we are seeing a sharp uptick again coming in US crude oil production. So I still have my doubts whether the US production will be able to continue to grow at a rapid pace. A lot of these basins seems to have been exhausted, especially the Permian basin. So that is one of the major factor, why prices have come down. Another factor which is playing out is the non-compliance of the quota within the OPEC. So with the ongoing crisis in Middle East, we are going to see more and more non-compliance being followed by oil producers. So whatever production cut OPEC has been imposing on the producers, they are not going to be met. And that is being one of the major reasons why oil is trading at $70 right now. So I think this remains quite an important factor in 2024, how much non-compliance and from whom we are going to see the further non-compliance. Third factor, expectation of the US slowdown. So there is a base case scenario that the US economy may slow down in the first half of the year due to the lag effect of the ongoing rate hikes what we've seen in 2023, which has finally come to an end. So all these factors makes me believe if there is not a drastic fall in US production from here, then oil prices are going to remain range bound to weak. And that's a good news for a country like India. It's not going to go up significantly. The energy transition to the cleaner fuel is taking at a rampant pace, especially in the emerging market and also in the developed market. That is also against crude oil. So the demand side doesn't look very attractive in 2024, and the supply side looks very well poised to meet the demand. So oil will stay between the range of $62 to $65 on the lower side. Maximum upside $80 to $85. That's the range, and the view as of now is sell on rise.
All right. How would you look at it, Ajay? And would you also call it sell on rise? And do you see $90 at all?
2024 is going to be an election period, and we have seen whenever there's an election period, no doubt uncertainties definitely prevail in the market. But I think crude should not sustain on higher side, because US has already came out with a number of production rise now currently having around 13.3 million barrel. It is on a higher side. Whereas within the OPEC also, as already we have discussed, there is many uncertainty with the OPEC members are also going there. So I think first quarter definitely we can say there would be a surplus. And going forward also, we expect prices is going to be on a broader range only. We can't see prices moving again towards 90-92 zone as of now, looking to the supply side. And demand slowly and steadily will improve. Most probably prices is going to be on a very narrow range only. Maybe support around for Brent could be 70. We don't expect prices to go below 70 also, nor below 90 also. So as of now, looking to the current fundamental, we expect 70 to 90 is going to be a broader range for Brent. Whereas surprise would be the from the spread between Brent and WTI, which is around $5.5. We expect this spread should come down. That clearly shows something from the supply side. We can say Brent supply should improve. That can drop the spread to the level of 2.5. So overall, from energy side, we expect crude is going to be on a choppy range only.
All right, definitely a good news when it comes to India, which is we are a consuming country here. Anuj, what's your sense? How would you look at the crude range? Do you also believe that 65 to 85 or 70 to 90 of a range is what you can hold for 2024? Also, when it comes to gas prices, where we are closing this year quite in the negative, what's your sense on this one?
Our range for crude is a little bit wide because we are expecting a very volatile session in 2024.
Okay.
So we are predicting $60 to $100 kind of thing because on a lower side we'll see a production cut by the OPEC members, and on higher side we will see increase in production by the US because both are fighting with the costing part. So US is fighting with the inflation. So to manage the inflation, they will start production of the crude oil, and the bread and butter for the OPEC member is the crude oil. So they will not want to see the crude oil prices on a lower level. So we'll see a fight between the production level from OPEC to the US. So we are expecting that crude oil price will trade between $16 per barrel to $100 per barrel. But yes, definitely price will be in the range. We will not see any huge run up in the crude oil prices. We'll see 20-30 the difference of this price in the 2024. Okay. But if we concern about the natural gas, we are expecting again a range bound momentum because the production higher is there, no demand from the US side, Europe side. So we are not expecting again a huge momentum in the natural gas price. Okay. Yes, definitely $1 to $3 we are expecting the range in the natural gas.
All right. All right, so not too much of gain coming in the next year when it comes to the energy as a sector. So that, of course, is a good news here. But one factor that we need to watch out for, of course, is the dollar index, where we are closing 2023 on a negative note. Kunal, a breach of 100 is what we will watch out for?
Well, India is about to make the first rupee payment of crude oil today, I think today or tomorrow. So this is the trend, set in. The de-dollarization trend is slowly and gradually taking up momentum. Okay. And I think the dollar index is heading towards 95.
All right. So that would be another added comfort when it comes to metals and various other commodities as well when it comes to the Indian markets there. Gentlemen, thank you so much for joining us. So it clearly is a buy when it comes to precious metals, synonymous really on gold and silver. In case of metals, copper, aluminum, zinc is also a buy, but energy markets could actually see a bit of a decline, and that works wonders for the other asset classes. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.